For Part 1, Understanding Clients' Business and Industry, the Philippine Heart Center is a government corporation organized and existing under the virtue of the Presidential Decree number 673. Inaugurated in February 14, 1975, the Philippine Heart Center was dedicated to the Filipino people as an institution committed to caring for patients with heart and related ailments. Since then, the center has stood as a testimony to the commitment to save lives and alleviate thousands who suffer from cardiovascular diseases, a leading cause of death in the Philippines. The center has brought renewed hope, especially to those who otherwise could not afford specialized medical care. Now, in its fourth decade of dedicated service, the center continues to bring increased optimism not just to Filipinos, but to the people of the Asia-Pacific region, as well as other countries who look to this medical facility as a wellspring of a healthier and longer life. At present, PHC is heavily involved in improving its facilities, expanding its capacity, and upgrading its human and technological resources to meet the increasing demand for its services. Amidst this self-imposed active renewal, PHC remains in focus in terms of its primary mission to care for those who need the best of what medical science with a social conscience has to offer. The Philippine Heart Center mission is to provide comprehensive cardiovascular care enhanced by education and research that is accessible to all. Its vision is to become the leader in upholding the highest standards of cardiovascular care, a self-reliant institution responsive to the health needs of the Filipino people, with objectives that to provide compassionate and expert patient care, provide world-class education and training, conduct internationally acclaimed research, and lastly, to responsibly disseminate scientific and lay information to the public. The following are the risks involved in a healthcare industry. First, cyber threats. Cyber attacks that endanger sensitive processes must therefore be avoided by healthcare professionals. Some cyber attackers can take sensitive roles for ransom, and others will snatch data secretly. Data breaches will do worse than damage your image and cost you money in court fees. Second, physical threats. Physical risks are becoming more prevalent in healthcare services. According to one report, hospitals are more prone to suffer a physical assault than a cyber attack or hack. The best but most expensive options are badged up, proximity badges, and biometrics. Third, compliance lack. The healthcare regulatory system is more too complicated than it has ever been, placing facilities at a greater risk of non-compliance. Rules and regulations that defer to healthcare institutions and providers must be thoroughly understood. In 2007, 94% of companies registered insufficient risk control strategies, according to the HAPAA journal. Non-compliance is also much more easily detected. Fourth, the healthcare illness. One of the greatest risks of healthcare facilities is spreadable illness and germs. Healthcare-associated infections lead to tens of thousands of deaths, such as every year. Infections that patients get while receiving its treatment for medical or surgical conditions. Company policy and training is crucial to ensure that this risk is prevented. Lastly, privacy management and information security. Many organizations have shared workstation with a general use password to easily record medical record notes. Patients now need to be able to view their own accounts and documents. Multi-factor authentication on-site and for patients is gaining momentum as a way to keep sensitive details secure. Pastel analysis. The healthcare industry depends on legislation, changes in economic rates, and technological advancement. Health will always be concerned no matter what is your age. People worry about exclusivity, new diseases, less treatment, and how much access they can have. Pestle analysis can help identify the major external environmental forces that shape the strategy and competitive landscape and support its strategic decision-making process. For the first element, the political factor. The effect of political climate on the healthcare industry's output is constantly changing. Owing to shifting government regulations, many countries around the world have implemented measures to curtail healthcare spending. Changing tax laws, workplace rules, consumer protection laws, and insurance mandate are all political factors that can have an effect on the healthcare industry. Changes in drug import laws, as well as protest by healthcare professionals over pay irregularities, are other major political problems that impact healthcare providers. Changing in tax policy have a major impact on government expenditure on the healthcare sector. The COVID-19 pandemic has had a major impact on PHC, as it has on all other organizations in the Philippines. PHC serves as one of the vaccination centers since it is a public entity, and this has a significant effect on its operational capability. For the economic factor, the PHC was under pressure to cut employee wages due to a shortage of funding and various economic regulations. As a result, a large majority of the PHC workforce left. In addition, the Philippine government implemented austerity measures such as cutting its budget by 2 billion pesos. The center was already facing financial difficulties as a result of the cutback. For the third element, the social factor, the average age of the Philippine population is rapidly growing. Because of the disparity in population between generations, this is a global phenomenon. As you get older, you'll have more health issues. Cardiovascular disorders are on the rise, owing to the fact that they are linked to the advancing age. This has put additional strain on the PHC, and it has become increasingly difficult for the organization to provide quality care to the rising number of cases in its current state. For the fourth element, the technological factor, overall technical advancement in healthcare have resulted in significant increase in the PHC service efficiency. Modern equipment such as sophisticated scanning system and other instruments has become a standard in all PH hospitals. The PHC has been able to take advantage of technical advances in order to offer high-quality, timely healthcare to all of its patients. The advancement of technology has also improved the medical education system. As a result, the PHC profits directly from having a more experienced workers to work with. Although there are still problems with understaffing in the PHC, there is hope that with the aid of modern medical institutions, they will be able to address the problem. For the fifth element, the environmental factor, the medical industry contributes significantly to the hazardous waste that is accumulating across the globe. In addition to the global climate crisis, all medical institutions are under a great deal of stress. They are held to a high standard in terms of treating their waste and money with strict caution. The PHC has taken measures to ensure that medical waste disposal has the least possible effect. And lastly, for the legal factor, patients who are disappointed with the PHC's quality of treatment are now bringing their complaints to the courts. In certain cases, it is a patient's family member who pursues civil action because they feel the medical system has treated the patient unfairly. The PHC has also faced a slew of such lawsuits from disgruntled patients. Applicable accounting framework. The financial statements of the Philippine Heart Center has been prepared in compliance with international public sector accounting standards. The PHC's financial statements have been prepared on the basis of historical cost unless stated otherwise. The financial statements are presented in Philippine peso. The PHC's functional and presentation currency and amounts are rounded off to the nearest peso unless otherwise stated. It also requires the entity to exercise judgment in applying the entity's accounting policy. Significant accounting policies. The Philippine Heart Center's financial statements are prepared on an accrual basis in according to the International Public Sector Accounting Standards, or IPSAS. For their financial instruments, it's been classified into four: the financial assets, financial liabilities, offsetting of financial instruments, and fair value of financial instruments. For the Philippine Heart Center applied the scope of IPSAS 29 financial instruments, recognition and measurement in their financial assets. The PHC's financial assets include cash and cash equivalents, trade and other trade receivables, loan and other loans. Financial assets are classified as held for trading if they have acquired for the purpose of selling or repurchasing on the near term. The PHC assesses their financial assets at each reporting date, whether there is an evidence that a financial asset is impaired. The asset is considered impaired if the PHC has transferred substantially all the risks and rewards of ownership of the assets and has transferred control. The Philippine Heart Center writes off receivables when there is no realistic prospect of future recovery. The Philippine Heart Center applies the scope of IPSAS 29 on their financial liabilities. All of their financial liabilities are recognized initially at fair value. In case under loans, it includes the directly attributable transaction costs. Gains and losses are recognized in surplus and deficit, when the liabilities are recognized as well as through the effective interest method amortization process. Financial liabilities are held for trading if they are acquired for the purpose of selling in the near term. Setting the financial instrument, they will only offset their financial instrument when there is an currently enforceable legal rights to balance the recognized amounts and there is an agreement to settle on a net basis, or to realize the asset and settle the liabilities together. The financial asset and liabilities are offset and the net amount recorded in the statement of financial position. For the fair value of financial instrument, the fair value of financial instrument that are traded in active market at each reporting date is determined by reference to the quoted market price or dealer price quotations, without any deduction for transaction. For the center's cash and cash equivalent, it comprises cash on hand and cash in bank, deposit on call, and highly liquidated investment with an original maturity of 3 months or less, which are readily convertible to known amounts of cash and are subject to insignificant risk of changes in value. For the center's inventories, inventory is measured at cost upon initial recognition. To the extent that inventory is received through non-exchange transaction, the cost of the inventory is its fair value at the date of acquisition. After the initial recognition, inventory is measured at the lower of cost and net realizable value. For the center's investment property, it is measured initially at cost, including the transaction cost. Property is recognized either when it has been disposed of or when it is permanently withdrawn from use. The difference between the net disposal proceeds and the carrying amount of the asset is recognized in the surplus or deficit and the period of the recognition. The PHC uses the following criteria to distinguish investment property from owner-occupied property and from property held for sale in the ordinary course of operation. The carrying amount includes the replacement cost of components of an existing investment property at the time that the cost is incurred. For the center's property, plant, and equipment, the center uses a residual value equivalent to at least 5% of the cost of the PPE. An asset's carrying amount is greater than its estimated recoverable service amount. Any significant part of an asset upon disposal or when no future economic benefits or service potential is possible is derecognized. Any gain or loss is expected from its continuing use. For the center's leases that transfer substantially all the risks and rewards incidental to ownership of an asset are classified as finance lease. Gross investment in lease is the aggregate of the minimum lease payment receivable by the lessor. Leases on other than finance lease are classified as operating lease. Initial direct costs incurred in negotiating and operating lease are added to the carrying amount of the leased asset and recognized over the lease term. The depreciation policies of PPE are applied to similar assets leased by the entity. And lastly, for the center's provision contingent liabilities and contingent assets, provision are recognized when the PHC has a present obligation, whether legal or constructive, as a result of a past event. The expense relating to any provision is presented in the statement of financial performance, net of any reimbursement. Provisions are reviewed at each reporting date and adjusted to reflect the current best estimate. The PHC does not recognize a contingent liability, but discloses details of any contingencies in the notes to the financial statements. PHC also does not recognize a contingent asset, rather discloses details of the possible asset whose existence is contingent on the occurrence or non-occurrence of one or more uncertain future events, not wholly within the control of the PHC in the notes to financial statements. The Philippine Heart Center's objectives and strategies. Philippine Heart Center aims to build, run, and maintain a public heart center, including a specialized heart hospital. Apart from providing medical care, the center is actively involved in cardiovascular research, education, and training. It provides a wide range of services including patient care, education and training, science and public education. It conducts numerous research projects aimed at preventing and controlling cardiovascular diseases and runs a national awareness campaign about the heart and heart care. It provides its patients with the finest and most effective medical care possible by maintaining a pool of highly qualified and experienced physicians.
Good evening, everyone. Next will be part 2, Assess Client Business Risk. The healthcare industry faces unprecedented risk and compounding regulatory compliance requirements. They're particularly vulnerable due to their heavy involvement in patient personal information, time constraints, and the nature of the day-to-day operations. The following are Philippine Heart Center's business risk. First is the credit risk. Credit risk refers to the risk that the counterparty will default on its contractual obligations, resulting in financial loss to the PHC. The PHC has adopted a policy of only dealing with creditworthy counterparties and obtaining sufficient collateral or security deposit where appropriate as a means of mitigating the risk of financial loss from defaults. The PHC defines counterparties as having similar characteristics if they are related entities. Next is liquidity risk. Liquidity risk is the risk that the PHC might encounter difficulty in meeting obligations from its financial liabilities. The liquidity risk is the adverse situation when the PHC encounters difficulty in meeting unconditionally the settlement of its obligations at maturity. Prudent liquidity management requires that liquidity risks are identified, measured, monitored, and controlled in a comprehensive and timely manner. Liquidity management is a major component of the corporate-wide risk management system. Liquidity planning takes into consideration various possible changes in economic, market, political, regulatory, and other external factors that may affect the liquidity position of PHC. Next is market risk. Market risk is the risk that changes in the market prices, such as interest rate, equity prices, foreign exchange rates, and credit spreads, will affect the PHC's income or the value of its holdings of financial instruments. The objective of market risk management is to manage and control market risk exposures within acceptable parameters while optimizing the return on risk. The management of interest risk against interest gap limits is supplemented by monitoring the sensitivity of the PHC's financial assets and liabilities to various standard and non-standard interest rate scenarios. Next is cyber threats. The company continues changes as new technology is developed and implemented into patient care, facility management, and everyday routines. As a result, cyber threats continue to evolve to adapt to and circumnavigate these updates. Primary concerns stem from electronic records of personally identifiable information or PII. While these are easy to access internally and through approved third parties, the records also become more vulnerable to cyber criminals. Data breaches and gaps in network security can extend far beyond damaging the company's reputation and accruing legal fees, but also endanger the patients the hospital vowed to protect. Next is healthcare illness. It's not difficult to imagine that one of the greatest risks of PHC's facility is spreadable illness and germs. Affecting both PHC staffs and patients, unnecessary exposure to bacteria or viruses can completely derail its operations. This ranges from catching a cold to healthcare-associated infections. The PHC's policies and training are crucial to ensure this is prevented. Simple processes like washing your hands after treating every patient has been recommended and is now required because it reduces the likelihood of transferring illness. The company must ensure sanitation systems up to date and all employees must be well trained. Next is human risk. For a healthcare organization like PHC, human risk can lead to misdiagnosis or delayed diagnosis, prescribing errors, adverse interactions, and wrong method of administering, failure to take proper history or failure to spot allergies or intolerances, and failure to act on results in a timely or appropriate manner. One of the human risks that PHC may encounter is medical malpractice. Medical malpractice occurs when a healthcare professional or provider neglects to provide appropriate treatment, omits to take the appropriate action, and gives the substandard treatment that causes harm, injury, or death to a patient. Next is process risk. Process risk is a risk of having inappropriate time waiting protocols leading to delays in processes with adverse impact and inappropriate triage processes leading to mistreatment or untimely treatment. PHC must have a proper clinical processes, guidelines, and discharge or admission protocols to mitigate this kind of risk. Next is operational risk. It is the risk of direct or indirect loss arising from a wide variety of causes associated with the PHC's processes, personnel, technology, and infrastructure, and from external factors other than credit, market, and liquidity risk, such as those arising from legal and regulatory requirements and generally accepted standards of corporate behavior. Operational risks arise from all of the PHC's operations and are faced by all business entities. The PHC's objective is to manage operational risk to balance the avoidance of financial losses and damage to the PHC's reputation with overall cost effectiveness and to avoid control procedures that restrict initiative and creativity. Next is cyber threats. The company continuously changes as new technology is developed and implemented into patient care, facility management, and everyday routines. As a result, cyber threats continue to evolve to adapt to and circumnavigate these updates. Primary concerns stem from electronic records of personally identifiable information. While these are easy to access internally and through approved third parties, the records also become more vulnerable to cyber criminals. Data breaches and gaps in network security can extend far beyond damaging the company's reputation and accruing legal fees, but also endanger the patients the hospital vowed to protect. Next is healthcare illness. It's not difficult to imagine that one of the greatest risks of PHC's facilities is spreadable illness and germs. Affecting both PHC staffs and patients, unnecessary exposure to bacteria and viruses can completely derail its operations. This ranges from catching a cold to healthcare-associated infections. The PHC's policies and training are crucial to ensure this is prevented. Simple processes like washing your hands after treating every patient have been recommended and are now required because it reduces the likelihood of transferring illness. The company must ensure sanitation system up to date and all employees must be well trained. Next is human risk. For a healthcare organization like PHC, human risk can lead to misdiagnosis or delayed diagnosis, prescribing errors or dosing error, adverse interactions, and wrong method of administering, failure to take proper history or failure to spot allergies or intolerances, and failure to act on results in a timely or appropriate manner. One of the human risks that PHC might encounter is medical malpractice. Medical malpractice occurs when a healthcare professional or provider neglects to provide appropriate treatment, omits to take appropriate action, or gives the substandard treatment that causes harm, injury, or death to a patient. Next is process risk. Process risk is the risk of having inappropriate waiting time protocols leading to delays in process with adverse impact and inappropriate triage processes leading to mistreatment or untimely treatment. PHC must have a proper clinical process guidelines and discharge or admission protocols to mitigate this kind of risk. Next will be this system disruption. A system disruption is a failure of certain systems to provide or perform their primary function for a period of time. For the healthcare organizations, unplanned downtime means that they cannot function effectively. Since the disruption might affect every aspect of their operations, from patient care to admissions to supply chain and more. A system disruption might prevent an organization that relies on electronic health record or EHR systems from registering patients, scheduling appointments, and assessing test results. Next is data loss. Data loss usually happens when information is destroyed by failures during storage, processing, or transmission. It can be deliberate or the result of human mistakes. The consequences of such incidents for PHC can be severe. If the extremely sensitive data of PHC's clients and employees, which includes personal information, financial data, and results of clinical examinations, ends up in the wrong hands, it might be used for phishing attacks, blackmails, or fraud. Even if patient data is lost rather than stolen, vital healthcare procedures might be delayed and important decisions might be lost
Part 3, internal control over financial reporting. Control environment. Integrity and ethical values. Philippine Heart Center conduct themselves in the highest standards of professionalism and ethics. It shall uphold fairness and honesty in all their dealings with their patients, partners, and suppliers. It is believed that it is only in doing so that they preserve the right to serve the nation and the country. Next is the commitment to competence. Philippine Heart Center determines the necessary competence of persons doing work under its control that affects the performance and effectiveness of the quality management system. It ensures that these persons are competent on the basis of appropriate education, training, or experience where applicable, take actions to acquire the necessary competence and evaluate the effectiveness of the actions taken and retain appropriate documented information as evidence of competence. Next is the assignment of responsibility and authority, or organizational structure. Philippine Heart Center are headed by a competent working board and has board charter that clearly states its assigned roles, responsibilities, and accountabilities in performing their fiduciary role that fosters the long-term success of the company, which sustains its competitiveness and profitability in a manner consistent with its company's objectives. Next is for the risk assessment. Philippine Heart Center oversees and monitors the implementation of the company's business objectives and strategy. It determines the internal and external issues that are relevant to its purpose and its strategic direction and that can affect its ability to achieve the intended results of its quality management. It monitors and reviews information about these internal and external issues and is accomplished by process owners after considering the issues. These are reviewed at least once a year upon management's direction when there are majority changes for the organization. Next is PHC has an adequate and effective risk management approach in the conduct of its business. PHC's risk management is the planned and systematic approach to identifying, analyzing, evaluating, and treating risks at all levels of the organization. It involves the determining of the acceptable levels of exposure to risk, which enables the achievement of the identified objects across the organizations. PHC's approach to risk management process supports the top management and risk owners in determining actions for prioritizations. This approach is aligned to the development of the organization's strategic planning initiatives. Next is the PHC has governance process on IT issues. It guarantees maintenance of an efficient IT systems to ensure and safeguard organizations' knowledge, which includes provision of well-functioning computer systems and hardware and software. For libraries, it is governed by policies and controls to protect its information assets and critical infrastructures from security threats to ensure availability, integrity, confidentiality, privacy, safety, and reliability. Next is for the information and communication. First is the maintenance of a comprehensive and cost-efficient communication channel. It communicates and consults with internal and external interested party and establish the internal and external issues for the interested parties. It determines relevant interested parties and the relevant requirements that can affect or potentially affect the quality management system. It shall monitor and review information about these interested parties and the relevant requirements. Next is PHC ensures an adequate and timely information. PHC determines the internal and external communications that are relevant to the quality management system. The internal communication details between process interactions are described within the respective policy manuals of their divisions. It is also posted at the PHC intranet and its website. Also, internal communications are made through office memorandum. For external communications are those duly signed emanating from the office of the executive director. The quality policy is maintained as documented information, disseminated as a separate document, and is communicated, understood, and implemented throughout the organization. It is also available to relevant interested parties. Next, for the control activities. Board oversees that an appropriate internal control system is in place. The board is responsible for coordinating the development of policy guidelines to ensure consistent formatting, coordination of revision or addition to the organization's policies and procedures, and the distribution of this information. It is the responsibility of the office head to disseminate information pertinent to the functions of subordinates and to ensure that the employees are aware of, understand, and comply with all issued policies and procedures in this quality manual. Next is the PHC implemented non-conformity and corrective actions. PHC maintains a corrective action procedure to ensure that it reacts to the non-conformity and take actions to control and correct it or deal with the consequences. The procedure also provides a system for reviewing, analyzing, determining the issues, and if similar nonconformity exists or could potentially occur, to ensure that appropriate corrective actions are taken. Records of the nature of nonconformities and any subsequent actions taken or results of is for the monitoring. Annual assessment. The top management reviews the quality management at least once a year and or at planned intervals to ensure its continuing adequacy, applicability, and effectiveness. The review is led by the quality management representative, deputy quality management representative, and quality leader. The review evaluates the need for changes to the organization's quality management system, including its quality policy and objective quality. The review includes the status of actions from previous management's reviews. Next is the changes in internal and external issues that are related to quality management system, the effectiveness of actions taken to address risks and opportunities, and information on the performance and objectives of quality management system, including trends in client satisfaction, feedback from relevant interested parties, or the extent to which quality objectives have been met, or the PHC's and individual performance indicators, and nonconformities and corrective actions to monitoring and audit results. That will be all for the part 3. Thank you.
So, the fourth part of our audit is the substantive review on financial data. So, the audit was conducted in accordance with international standards in auditing. So, the decision about which audit procedures to perform is based on the auditor's judgment about the expected effectiveness and efficiency of the available audit procedures to reduce audit risk at the assertion level to an acceptably low level. So, the first would be valuation of liabilities account. So the following audit procedures are performed on the valuation of liabilities account. First, we review the general ledgers of PHC as well as the details for each control account, which is found in the subsidiary ledgers. So the government accounting manual requires subsidiary records to be kept where necessary. The maintenance of subsidiary ledgers provides veracity of the information provided by the company. So, to do this, we have asked the accounting division for copies of the general ledgers and the subsidiary ledgers. Next, we compare the balances between the book and the results of confirmation in the accounts payable account. So, reconciliation of balances provides accuracy for the balances recorded in the book. So, to do this, we have sent letters of confirmation to creditors to verify the correctness of the balance of the accounts payable account and compared it with the book balances. Next, we have compared the balances in the guarantee deposits payable patients account between the accounting records and the report of undischarged patients of the Management Information Systems Division, or the MISD. So the guarantees deposits payable patients account is a liability account used to record patients' deposits paid upon admission as well as subsequent deposits paid during confinement. So the deposits are applied against the patient's total hospital bills upon discharge. So the balance of this account would correspond to the deposits made by patients who have not been discharged yet. So we have reconciled these balances to provide accuracy of the recorded balances. Next, the valuation of inventories account. So the following audit procedures are performed on the valuation of inventories account. So first, we have compared the balances between the books and the report on the physical count of inventory. So the report on the physical count of inventories is a form used to report the physical count of inventory, and it shall be reconciled with the supplies ledger cards and stock cards, which is maintained by the accounting division and property division respectively. Next, we have checked the inventory valuation used by the company, whether it is periodic inventory system or perpetual inventory system. Since PHC is a government entity, it is under the provision of the Government Accounting Manual. So the Government Accounting Manual provides that supplies and materials purchased for inventory purposes shall be recorded using the perpetual inventory system. The results of this would be more accurate in recording the inventory accounts, and also a running total for the cost of goods sold is shown. Next, we have valuation of PPE account. So the following audit procedures are performed on the valuation of PPE account. So first, we have compared the balances of the cost of PPEs per accounting records and the report on the physical count of PPE. So the reconciliation of balances provides accuracy for the balances recorded in the book. So to do this, we have asked for copies regarding the balances of the PPE account from the accounting division and reconciled this with the records from the property and supply management division, or the PSMD. Next, we have checked if the property, plant, and equipment ledger cards, or the PPELC, were maintained by the accounting division. So the GAM provides, or the Government Accounting Manual provides, that the chief accountant shall maintain PPELC for each category of PPE. The PPELC shall be kept to record promptly the acquisition, description, custody, estimated useful life, depreciation, impairment loss, disposal, and other information about these assets. So to do this, we have examined if the accounting division has kept PPELC per account and fund cluster. And we have also checked if reconciliation were done with the corresponding general ledgers controlling account. Next, we have valuation of receivables account. So the following audit procedures are performed on the valuation of receivables account. So we have checked the receivables account, their sub-accounts, their corresponding supporting subsidiary ledgers, and the corresponding aging schedules. So the preparation of the complete supporting subsidiary ledgers and aging schedules of the receivable accounts provides accuracy for the balances thereof. Thus, it gives a lesser room for material misstatements. Next, we have compared the balances between the book and the results of confirmation in the accounts receivable account. So, the reconciliation of balances provides accuracy for the balances recorded in the book. So, to do this, we have sent letters of confirmation to debtors to verify the correctness of the balances of the accounts receivable account. And lastly, compliance with PhilHealth's no balance billing, or the NBB policy. So, we have examined whether the PHC has complied with PhilHealth's policies regarding the NBB policy. So, we have examined the out-of-pocket money paid by the patient for the professional fees for additional services rendered which is not consistent with the provisions of PhilHealth. We have analyzed the entries made per Journal of Bills Rendered, or the JBR, pertaining to PhilHealth Z benefit package transactions. We have also requested copies of Memorandum of Agreement, or MOA, executed by and between the PHC and PhilHealth relative to the implementation of the PhilHealth Z benefit package program. as well as the guidelines and other related documents in the recording of Z benefit transactions. And we will examine whether the PHC has really complied with these policies. That would be all for part 4.
Okay, so good day everyone. Good day Miss Mora and Miss Fergie and to my classmates. Let's now proceed to the part 5, the audit findings and recommendations. I am Crisame E. Bases and I am here to report our audit findings and recommendations in connection with our client, the Philippine Heart Center. So first finding is that the inadequate internal control system over inventories of hospital supplies and materials kept at various income centers of PHC, which was not in accordance with sections 101, 104, and 105 of Presidential Decree Number 145, may result in possible concealment of inventory shortages without being detected. COA likewise said that the PHC failed to impose adequate control measures in the requisitions, storage, handling, and inventory of supplies and materials at its operating room, thus exposing the items to risk of loss and misuse. These findings summed up the compliance issues raised by state audit examiners in the audit report. So our recommendation is that the PHC should prepare a manual of policies and procedures for inventories of the hospital to be followed by all concerned. And the second one is that for check and balance, assign a personnel other than the storekeeper who will be responsible in checking the physical count of inventories received from the central warehouse against the quantity indicated in the requisition and issue slip and the items released from the storeroom for use in the division or section. Require both the storekeeper and the personnel who perform the count to sign the RIS. The third one is that they should amend or update the inventory reports of all income centers with the following column headings at the minimum, such as the article, description, stock number, unit of measurement, unit value, balance per accountability, on hand per count, shortage or overage, remarks such as the whereabouts, conditions, and other relevant information on the inventories noted during the physical count. The fourth recommendation is that they should institute a sound internal control system for inventories at the income centers to prevent loss or pilferage. And last is that in case of shortage due to improper or unauthorized unauthorized use or misapplication of inventories, hold liable the concerned accountable officer for the money, value thereof, in accordance with Section 105 of Presidential Decree Number 1445. Okay, next, the audit finding is that the intended benefits of acquiring 2 units of point-of-sale system by PHC costing 163,700 pesos per unit for Cafe 1475 under the administrative department were not fully attained due to frequent malfunction of the system and its inability to provide accurate sales report. Likewise, official receipts are not regularly issued to customer or clients contrary to Section 68 of Presidential Decree Number 1445. Thus, we recommend that the PHC should install measures to address the frequent malfunction of the POS system and its inability to provide accurate sales reports, such as, among others, consultation with the information or IT expert and seeking assistance with the supplier to solve the issues and require the cashier to issue ORS to client and its or customers. Next is the non-execution or non-renewal by PHC of lease contracts with various leases is contrary to COA Circular Number 88 282A dated March 31, 1988. Likewise, non-compliance by some leases with certain provisions of existing lease contracts resulted in unbilled revenues, thus lost opportunity to PHC to immediately use additional funds for its program or projects. The COA disclosed that there are 69 rooms with a total area of 2,466 square meters that do not have updated or valid contracts with those occupying the spaces. COA also noted that some leases have not been complying with the provisions of existing lease contracts, thus resulting in unbilled revenues and lost opportunity to the PHC. According to COA, most of the contracts of lease were executed as far as back the year 2009 and were not renewed until the year 2019. COA noted that despite leases' continuous use of the rooms, the Philippine Heart Center and the medical practitioners and consultants disregarded the perfection of new lease agreement immediately after the expiration of the previous contract. Aside from the lack of perfected contract, some leases have incurred delays in the payment of their monthly rentals and utilities. We recommend that they should instruct the General Services Division to first ensure that the use of property by the leases be covered by a contract or agreement, and the lease contracts include all the terms and conditions that would be fair for both the lessor PHC and the leases. And also, they should provide a stipulation on the contract of lease on rental or increase, escalation, and revise or amend the inconsistencies on the terms and condition of the lease contracts. The second recommendation is that they should direct the Credit and Collection Division to collect from the defaulting leases the unpaid rent and utilities and corresponding penalties. The next finding is that, according to PhilHealth, PHC did not comply with the provisions of the revised Implementing Rules and Regulations or IRR of the amended National Health Insurance Act NHIA of the year 2013. According to the COA report, which was released last April 28, this resulted in the accumulation of uncollectibles from PhilHealth and lost income on the part of PHC. PhilHealth has denied or returned around 3,907 claims worth 71.17 million presented by Philippine Heart Center because it did not comply with the provisions of the revised Implementing Rules and Regulations of the amended National Health Insurance Act of 2013. Citing information provided by the PhilHealth Regional Office, National Capital Region Central, the COA report said that the claims covered the period from January 1 to September 30 in the year 2020. Of the 71.17 million claims, 38.92 million were classified by PhilHealth as denied and 32.25 million were placed in a return to hospital status. COA explained that denied claims are those deemed invalid and unworthy of payment or reimbursement which cannot be fixed. Return to hospital claims are deficient claims that may be remedied if the healthcare institution can present certain lacking requirements. In these findings is that we recommend that the Philippine Heart Center's management should conduct a more thorough evaluation of the claims in question while exploring other remedies so that the PhilHealth may reconsider the claims, especially those classified as denied. Second one is that they should ensure that the employees in charge of PhilHealth affairs would be properly trained to avoid similar lapses in the future. The next findings and recommendation will be discussed by Kent Troy Magdadaro. Thank you.
So to continue with our part 5, the audit findings and its recommendation. First, the implementation of the no balance billing or NBB policy was not in accordance with the provisions of the Philippine Health Insurance Corporation or PhilHealth Circular Number 2017-0017 and PHC's own policy guidelines. Thus, first, there were 9 qualified NBB patients were charged and collected with hospital fees totaling 249,610 pesos, and the NBB policy was applied to patients confined beyond the 45-day limit, which increased PHC's expenses by 27.714 million in 2019. So under of this program, the NBB program, wherein the poor patients can actually avail of the benefits so long as their confinement does not reach beyond 45 days. However, the state auditors disclosed that there were actually 23 patients whose confinement cost the PHC with an approximate amount of 23.59 million pesos, wherein they stayed beyond the 45 days limit but have not been charged the extended days of confinement. Instead, the expenses were charged to PHC's fund. So as for our recommendation of this certain audit finding is, first, they should stop charging NBB qualified patients of hospital fees and other expenses above and beyond the package rates during their confinement period to comply with the provision of PhilHealth Circular Number 2017-0017. Second, they should strictly adhere with Philippine or PhilHealth Circular Number 2017-0017 with regard to the maximum 45-day confinement of NBB patients. Lastly, is that they should make representation with PhilHealth to amend certain provisions of PhilHealth Circular Number 2017-0017 if application thereof is not possible in PHC. So next audit finding is that the PHC conducted cardiovascular, surgical, and medical missions in 8 regional heart centers from 2015 to 2018 with a total expenses of 10.722 million, despite absence of a board resolution, policy, or any guidelines duly approved by the Board of Trustees, and there was no memorandum of agreement by and between the PHC and the Mending Kid covering its implementation, which are contrary to Presidential Decree number 673 S.1975 and COA Circular number 2012-001 dated June 14, 2012. And as for our recommendation of this finding is that they should submit to the audit team the first a board resolution authorizing the conduct of the cardiovascular, surgical, and medical mission and the policies or guidelines on its implementation, and second, the MOA or the memorandum of agreement by and between the PHC and the Mending Kids. Otherwise, the disbursement thereto will be suspended in audit. And lastly, they should, or the PHC should, ensure that every project and program and any transaction entered into by the PHC with other government agencies or private entities shall be covered by any MOA, which is an essential part or requirement in entering such contract. So next audit finding is that there were certain inconsistencies in the compliance to the guidelines on charging for consigned items, which resulted in inaccurate charges to patients. Among those cited was the use of dual ICD package Fortify Asura DF. This is actually a medical item acquired by PHC at 74,500 but was sold to a patient at the same price, thus denying government a profit of 30% of PHC's purchase cost. So under the guidelines, PHC can actually prescribe a markup rate of 30% of the contract price of an item costing 20,001 and above, while a special discount of 12% may be granted to those patients not covered by the government mandated discount. So for consigned items naman priced at 20,000 and below, the PHC can actually mark PHC's markups may vary from 43%, 55, 65, and 75%. However, as gathered from available records, which made available through the COA, they have noted an overcharging of consigned items by as high as 75% of a certain medical items, yet undercharging at 65 were also imposed for other materials costing 20,001 and above. And another case from PHC's financial records indicating that there were no markup at all charged from patients, making PHC at the disadvantage in terms of their income. So as for our recommendation of this audit finding is that first, they should strictly implement PHC Memorandum Number DO-M:186:2017 on the guidelines on charging for consigned items, and lastly, they should review thoroughly the existing billing statement system for the reliability and accuracy of the patient's statement of account. Lastly, for our audit finding is that the amount of unsettled bills at the Philippine Heart Center has reached more than half a billion pesos, or 627.653 million as of December 2017. And out of its total, about 172.937 million, or 27%, date back to more than 10 years ago. And the accounts receivable of the hospital include first, a promissory notes costing 335.2 million. Next, unexpired accounts without promissory notes costing 77.236 million. Third, bills of undischarged patients costing 4.484 million pesos. Next, absconded patients costing 5.017 million pesos. And last, a receivables from a certain politicians at or costing 2.083 million pesos. So as for our recommendation with regard to this audit finding is first, they should improve its policies regarding promissory notes, which comprise the bulk of dormant accounts. And next, a revisions of its existing policies on promissory notes to better protect the interest of both patients and the hospitals, in addition to coming up with clear guidelines for coordination among the departments concerned, such as the credit and collection, nursing, and accounting divisions. So that would be all for the part 5 of our audit report. Thank you.
Okay, so now we will proceed to the part 6 of the audit report, which is the external audit report. So we were engaged to have audited the financial statements of Philippine Heart Center for the year ended December 31, 2020, which comprise of the balance sheet of the company, the statement of financial activities, statement of changes in equities, statement of cash flows, and notes to the financial statements, including a summary of significant accounting. So here, let's tackle first with the management responsibility for these financial statements. So management is responsible for the preparation and presentation of these financial statements in accordance with generally accepted accounting principles, or GAAP, in the Philippines, and for such internal control as management determines is necessary to enable the preparation of financial statements that are free from material misstatements, whether due to fraud or error. So, as an auditor, our responsibility is to express an opinion on these financial statements based on conducting the audit with Philippine Standards on Auditing, or PSA. So because of these matters described, we were not able to obtain sufficient appropriate evidence to provide a basis for audit opinion. So here, the basis for disclaimer of opinion is this: the accuracy and validity of the inventories and property, plant, and equipment accounts, excluding land, are unreliable due to the discrepancy between their total book balances and the results of the physical inventory. Likewise, the accuracy, validity, and reliability of the cash in bank local currency current account are doubtful due to the unadjusted or unidentified or unsupported reconciling items in the bank reconciliation statement. Non-submission of paid checks, inclusion of stale checks, and checks debited by the bank in the reconciling items, and also non-reconciliation of bank and book balances. Moreover, bank reconciliation statements for 3 current accounts were not submitted, subsidiary ledgers for all banks' accounts were not maintained, and cash books for all banks' accounts were not reconciled with the ledger. Furthermore, unserviceable property already disposed of were not dropped from the books of accounts, while other unserviceable property awaiting disposal were not reclassified from property, plant, and equipment account to other assets account, resulting in the overstatement of the property, plant, and equipment account. Also, lastly, the financial statements under the general fund include various assets and liability accounts of which the validity and correct could not be ascertained due to the absence of the schedules of subsidiary ledger balances, subsidiary ledgers, and supporting documents, and while others were supported with schedules of subsidiary ledger balances, details or proper identifications of payees were not provided. Therefore, because of the significance of the matters described in the basis for disclaimer of opinion paragraph, we have not been able to obtain sufficient appropriate evidence to provide a basis for an opinion. Accordingly, we do not express an opinion on the financial statements.